Christine, welcome to the show. Positive momentum from the get-go, really. Nothing seems to have changed this afternoon, or have I missed something?
Good afternoon, Carson. Not much has changed. The Australian share market is so far up about 0.7%, with every sector positive. The information technology shares are leading the gains. That's up about 1.8%. And financials and materials are also doing well too. And it does follow that lead from Wall Street. We've obviously shrugged off that poor jobs data from yesterday, where we did see the unemployment rates sitting at a high at 6%. And Rio today have been a standout. It was up over 1% this morning. Has since fallen back on some profit taking after its stellar earnings report last night. Sims Metal has jumped as well after it doubled its December net profit. It's up about 8%. And consumer discretionaries have also recovered, up 0.7% after US retail sales report yesterday saw a slowdown of 0.4%. So a positive session for the Australian share market, and it does look like we're up about 4.5% for the week.
Okay, a few nerves, it would seem, around Newcrest's results. Okay, it's working hard on its cost out, on its, those key metrics, in other words, but the rise in the net debt, do you believe that's somewhat of an explanation for why we are seeing selling this hour?
Well, Newcrest has failed to follow the gold price higher today, unfortunately. We did see the gold price topping $1,300 an ounce for the first time in 3 months. And it's closing in around that $1,304 an ounce mark, which is the 200-day moving average. And that level hasn't been breached in over a year, so that is a bit of a cautious level. The data last night also from the US showing retail sales in the US falling 0.4% doesn't bode well for the world's largest economy. Consumer spending makes up 70% of the US economy. We did see another 0.4% added to gold overnight as a safe haven asset. So that precious metal jumping 70% since 2008 after the Federal Reserve injected more than $2 trillion into the economy, but it has fallen close to 30% last year. But in 2014, we have seen that safe haven metal climbing 8%, thanks to that rout in emerging markets, and a strong physical demand from Asia as well has added to the strength in gold this year, with a 41% jump in consumption in 2013. And despite the new taxes and restrictions in Indian consumption, consumption is also up 5%. So that's a positive outlook for gold, which means Newcrest Mining today announcing that $14 million statutory profit in its first half is a positive result. Its outlook is good. There's an improvement expected, though, on that 36% fall in underlying profit to $207 million in the last 6 months. The company doesn't plan on paying dividends this year, but it does hope to be in a position to return to paying dividends to its shareholders. So shares in its mine are a bit flat at the moment, currently down 1%.
Yeah, well, that's right. They're swimming against the tide of the broader market. I'm hearing news of a potential rights issue, or at least concerns and nerves about that. You wouldn't characterise the outlook as being good, would you, if you're in the next breath seriously contemplating a rights issue?
Well, yeah, absolutely. I mean, that does raise concerns for the market, but any activity, I think, is going to be good, and any news is good. You can see that the company is working on a return to cash flow, so that's always a positive.
Let's talk Paladin. This is the uranium play, and it's written down the value of some of its ventures, so that's in large part accounting for the net loss. That's indeed on revenue that is not looking at all steady. What do you make of that line?
Not looking very steady at all, Carson. Announcing a first half loss of $255 million, down 32% from the previous year, with a 12% decline on revenue. And no surprise, the group has declined to pay an interim dividend. Now, it's due to an enormous write-down in its Queensland uranium ventures. The company was forced to write down $226 million in the value of its Queensland exploration assets, really thanks to the uranium prices. Uranium prices have really dragged on its overall report. It's closed its mine in Malawi while waiting for prices to recover. We've seen a steady drop in share price since February 2013, when it was trading around $1.24 compared to that 48 cents it's traded at today. Much of that is due to market issues. We've seen the general market sell-off and the Fukushima closure after the Japanese tsunami as well. But there are also company specifics like refinancing concerns, and that has seen an improvement. But Paladin needs the uranium price to recover recover to around $47 a pound to be cash flow neutral. So the outlook isn't good. Uranium prices are at 8-year lows. Prices have fallen 47% since March of 2011, which was when the Japanese earthquake struck. Rio Tinto recently announced it doesn't expect prices to recover until 2015 or 2016. And the outlook for prices for uranium is to be trading around that $41 a pound in 2014, when it's currently at around $36. There's been a much-needed cash injection with the sale of a 25% stake in Langer Heinrich to China Uranium Corp for about $190 million. The company has $275 million in convertible bonds on its books as the most expensive debt, and there's also $300 million which is due in November 15. So that sale has given Paladin the ability to survive until then, but it is a bit of a gloomy outlook. Its first half lost widening and shares are flat at the moment.